Forex School Uganda. I'm Godfrey. Today I want us to do a quick analysis on the EURNZD currency pair. That's the Euro New Zealand dollar currency pair. We're going to do a top-down analysis to see where price is at right now and where we anticipate it to get to in the next coming few hours and perhaps a few days once the market opens on Monday for trading. So this is the monthly time frame, and as we can see, price is currently ranging between these highs right here and this low down here. So there's no clear direction as far as the monthly time frame is concerned. What you can see is that price bounced off this area to the upside, then came back down, bounced off this area again to the upside, and currently we see that with this strong bearish candle, price tested and rejected the resistance area, and now we see it sliding slowly to the downside to potentially come and retest these lows here down once again. And so the monthly perspective is generally bearish as far as the structure of the market is concerned. Of course, the general structure is bullish, with price making a series of higher highs and higher lows, but currently it's in a state of consolidation, and within the consolidation range, price is bearish, bouncing off the resistance area and doesn't quite yet touch the support area. So we anticipate that price will continue to the downside to come and touch this support area down right here. So I'm going to drop down to the weekly time frame to see what perspective we get. Now this is a weekly time frame, and within the monthly range we see that there's a weekly structure that is currently forming at the moment, and I want us to break it down a little bit. We see that price here moved impulsively to the upside, and it was followed by this correction that is happening right now. And during this correction, we see that price made this low, followed by a lower high, and then a lower low, and now it's just completed the formation of a lower high, and we expect the next move to be the creation of a new lower low, with price coming to retest these lows here that were formed at the beginning of the impulsive move to the upside. Now secondly, also still within this weekly time frame, we see that during this corrective move to the downside that is happening right now, price formed an area of resistance here, or let's call it support, that it was able to break down below, coming to form this low here, which was really a retest of a previously formed support area down here when you look at it from the left side right here. And now we see that with this move back to the upside, it's just a retracement to come and retest this broken support now turned resistance. And now when support is broken, we know of course it becomes resistance, and that's exactly what happened here with this strong move to the downside, or call it an impulsive move to the downside, followed by this correction to come and retest this support now turned resistance area. And now we are currently seeing price bounce off, and we could potentially see it drive back again to come and retest these lows, and probably better still come and retest these weekly lows down here that were formed during the impulsive move to the upside. The other thing that is also very clear right here is that price moved impulsively coming into these lows, followed by this corrective move to the upside. And after an impulsive move and a correction, what do you expect to see? We expect to see another impulsive move in the market to complete what we know as the impulse correction and impulsive formations in the market. And so given that set of confluences, we expect price to move to the downside to complete the last impulsive leg in the market, coming to test these lows down here. Now also using our Fibonacci tool to measure the amount of retracement to see where it currently is at right now, and we measure it from the beginning of the move to the downside in this impulsive leg, which is from this high down to this low here. We see that price retraced and tested the 50% Fibonacci retracement level, which is a strong rejection area. All these act as sets of confluences to solidify our bias as bearish, and so we expect nothing less but to see price drop to the downside to potentially come and retest this low and probably this low down here. So our bias as far as the weekly perspective is concerned is bearish. We're going to drop down further to the daily time frame to see what perspective we get from it. Now looking at this daily time frame, we see that price was creating higher highs and higher lows. Now this was a high followed by this higher low, a low that is higher than the previous low, then followed by this higher high, and then a higher low, a new higher high. But now right here we see that price was able to drop down and break below the previous higher low to form a new lower low, indicating to us that the structure of the market or the character of the market has changed from a bullish one to a bearish one. Also notice that price has just tested this previous area of resistance and has been rejected from there. In fact, if we extend it to the left, you will see that it's not a new area, but rather an old area of resistance, and so it's a very strong area of resistance. And perhaps if we could even look further left, we could come into areas of resistance that have been formed before, indicating that this is an old area of resistance, and so it's a very strong area, and so we expect it to hold price to the downside. And now right here, when it came into this resistance, first it formed some kind of a consolidation right here, but now we see that price was able to break out of this consolidation to the downside, followed by this bullish candle that retraced to retest the broken support, now turned resistance, and it held it strongly to the downside, leaving behind an indecision candle that much as it closed bullish, yes, it was able to close below this resistance area with a long rejection wick to the upside. And so once price breaks the low of this wick to the downside, the low of this indecision candle to the downside, we expect nothing else but price to drop further down to come and at least retest these lows that we see down right here. And so the daily perspective is also bullish, and so we should be on the lookout for selling opportunities or bearish trading opportunities. And as a swing trader, you should drop down to the 4-hour time frame and look out for sale opportunities, swing trading sale opportunities. If you're a day trader, you could drop down to the 1 hour, look out for quick day trading opportunities. And if you're a scalper, you could drop down to the 30 minutes and 15 minutes time frames to look out for quick scalping opportunities in the market in this EURNZD currency pair. So that's analysis for today. And if you're new to the channel, kindly subscribe, like and share the video, and also turn on the notification so you are alerted every time I post new content on the channel. Thanks for watching. I will see you again.